Good evening, everybody. It is definitely springtime in Pittsburgh. I think it's going up into the 70s tomorrow. All right, before we do our normal session, we're throwing in, again, kind of our analysis of trend analysis uh, in here. Oh, 70s in northern New Jersey. Jeez, the groundhog was wrong. Yeah, yeah, I don't hold my breath. There's been so many. That's the reason I first moved to Houston after growing up in Pittsburgh. It was so discouraging that you're just so anxious for winter to be over, and you get a few warm days. The sun is out. The grass is starting to get unsoggy. You're running around in just your shirts without jackets because it was getting warm. And you're so anxious for spring to show up, and then bam, another snowstorm comes in. And so, anyways, we still have March and April to go through. Anyways, we're going to do a little a review again on our trend analysis because we're getting a lot of requests on how do you know what to do as far as, or how do you know which way a market's going. So this is all kind of part of the when we're right now in the middle of our emotional, eliminating emotions with candlesticks, that training session. And part of that is kind of having a much more clear indication of which way the general market is going. So if you're putting all your stars in alignment, seeing this in Minnesota, putting all your stars in alignment, if we know which way with a good probability the general market is moving, we can analyze with a good prospect of which sectors are acting the best in that trend. Then you can go to the best stock charts in those sectors and be putting your money in those because that kind of puts everything in order of analysis. So we'll run through this real quick, and I guess the rhetorical question, why is trend analysis important? Well, depending on what how you're trading your portfolio, is obviously in an uptrend, you want to be oriented toward the bullish side, downtrend, the bearish side. And if you're a day trader or a swing trader, you want to know what your probabilities are for your short-term trading, whether things are heading up or heading down. So when we do our analysis, our trend analysis indicators still utilize the signals, patterns, where we are in the trend as far as stochastics, where are we as far as hitting support and resistance levels, trend lines, moving averages. And again, our moving averages are very simple. The 200, the 50, and the 20 simple day moving average. And then our T line, which is the 8 exponential moving average. When we're analyzing the markets, we're analyzing the Dow, the NASDAQ, and the S&P 500. And a lot of people say, well, why do you use the Dow? Because that's only 30 stocks. Why not use something bigger like the New York Stock Exchange? The answer is these are all representative of what's going on in investor sentiment. And the time that it takes to look at the Dow, the NASDAQ, and the S&P 500 and visually analyze it takes all of 10 to 15 seconds doing all three of them. So it's not like you have to have a very sophisticated analysis of knowing what your uptrend looks like, knowing what your downtrend looks like, or whether you're in a sideways choppy market. We also know that markets, trends move in waves, usually a wave 1, wave 2, wave 3. We've got our simple analytical factors that everybody watches, like the pennant formations, breakouts, one way or the other. Seeing which way wedge formation is breaking out. So we get a much more clear visual knowing, well, they're buying right in here. So we're in a buy mode. That told us they supported on the bottom again. Now we just watch to see what happens at the top. So we're much better prepared for a price breakout. If we see a sideways trend channel, looking to see whether they're going to break out to the upside or break down to the downside. Again, this is not rocket science. That magnitude of a candle is a lot different than seeing indecisive candles right there on that support level. So we also have the T-line, and if for those folks that are new here, probably the T-line combination with your candlestick signals is the most powerful, high probability trading factor or trading indicator that you're ever going to come across. So there's a very simple rule of the T-line. If you see a candlestick buy signal and a close above the T-line, you can stay long until you see a candlestick sell signal and a close below the T-line. Works the same for a downtrend. A candlestick sell signal, you can stay short until you see a candlestick buy signal and a close above the T-line. So this is the kind of, the T-line is one of your strongest factors, because if you look at the other moving averages, the 200, the 50, and the 20, simple moving averages, everybody in the world that manages money uses those moving averages to make decisions about their portfolio. That kind of creates those moving averages to act like magnets, because people are either buying or selling or waiting for something to move back to a support or ready to sell at a resistance. So they're making their decisions at those levels. That's because everybody has them. They're waiting to see what happens at those levels. The T-line, the 8 exponential moving average, nobody has that on their charts. So when I tell people, put this on your chart and test it. Don't take my word for it. But you'll find it works very effectively for staying long as you see that they don't close below the T-line. So if you analyze the fact that nobody has the T-line on their charts and it works so effectively, the rationale has to be that the T-line is like a Fibonacci number. It's a natural support and resistance level of human nature. So when you combine the fact that candlestick signals are the graphic depiction of human nature, and you apply the T-line as a natural support and resistance level of human nature, that combination becomes extremely powerful when you put those two on the same chart. It will make your decision-making process much easier, and when to get in and when to get out much more effective. So because of the nature of candlestick signals, you can see it's been in an uptrend. We can see the patterns, the J-hooks, and we also know the nature of pullbacks. Notice when it pulled back right here. Was that a reversal or was that a pullback? Well, the fact that we know that dojis and spinning tops are indecisive trading, that if they're pulling it back indecisively, that tells us that there's not that much conviction on the selling. Get ready for the next move to the upside. It's kind of giving you a message. So if I see something like this where they're pulling back but not with any great decisiveness, I'm getting ready for the next wave to the upside. So we can, because each signal gives you information, we can use information that if we see a trend channel setting up, we can see what happens at the top of that channel and at the bottom of that channel. And we'll get into that a little bit more. But there's some very simple conclusions you can make when utilizing the Dow, the NASDAQ, and the S&P. For example, I think this was the Dow. Notice what the Dow was doing. Kind of in a trend channel using the 20 as support. And at the same time, notice what the NASDAQ was doing. it was still in an uptrend, and on any given day, the NASDAQ may be down at the same time the Dow is up. So if you're in a market trend and you see one index trading lower and the next index trading higher in that trend, what's that basically tell you? It tells you there really hasn't been any major change of investor sentiment. It's just probably some shifting of funds from one sector to the next. What becomes your conclusion as far as analyzing a trend is if on every time they pull this market back to this trend line that is now obvious, and they did a doji right on that trend line, and we know the simple rule of a doji, the prices are usually going to move in the direction of how they open after a doji, but if this trend line is supporting, we should see positive pre-market futures telling us they're opening higher. On that day, the pre-market futures were down 140 points. So what did that tell us immediately? That this trend support level was not acting as support anymore. The same day, we had a bearish engulfing signal the previous day up here on the NASDAQ, and the pre-market futures, they were gapping down. So just very simple logic says if the Dow is not supporting at the trend channel anymore, and they're gapping down from a bearish engulfing signal at the top of the trend on the NASDAQ, there's been a dramatic change of investor sentiment. Not only should you be getting out of your long positions, but you should be going short. This is not, again, rocket science. This is just using the signals telling us what is happening in investor sentiment. And when it's not coinciding with each other during the trend hasn't changed. When it's coinciding, that tells you there's now a consensus between the buyers and the sellers that the sellers are taking control. We can also use that different support and resistance levels to our advantage, knowing that when we start seeing buy signals, where do we expect it to move to? Well, if they've had a support area breached, they'll usually come back up and see if that support area is going to now act as resistance. How do we know whether it's going to act as resistance? Because when it gets up here, we can see there's a much more indecisiveness in the trading up here. Little hanging man, little shooting star, hanging man, bearish confirmation. What did that tell us? That they weren't going to go through the 50. They pull back to the 20. There's our signal again, a bullish harami, which tells us what? That the selling has stopped. So we know that if they come up and test a resistance level and fails, and then go up the second time, they're usually going to go through. And we also know that if they go through a resistance level, what do? Just like here, when they go through a support level, they come back to see if it's going to act as resistance. When they go through the resistance level, they come back and see if it's going to act as support. And because we're watching what everybody else is watching, we've got a much more clear indication what's happening because there's our bullish harami again, telling us the selling has stopped. We're getting ready for the next price move. Which candle is the bullish harami? It's usually it's called an inside day in Western terminology. It's where they open it above the previous day's close and close below the previous day's open. So it opens and closes within the previous candle. Here's another one right here where you can see they opened it just above where they closed it the previous day and closed it with a hammer type signal below the previous day's open. Bullish harami, hammer, stochastics coming up, next day bullish confirmation. Can you point to them on the chart? I thought I was. Is my cursor not working? It's right here, just above this last arrow. Ooh, is my cursor not working for everybody? Okay. Harry, something's wrong because the cursor's running around up there. Yeah, I don't know how to get the darn cross thing off of there. It has something to do with, I don't know why it does that. All right, so observe the obvious. If there's a resistance level bearish engulfing. Bearish engulfing. That tells us exactly what we want to know, that resistance level is still going to act as resistance. So if we know that we can see exactly what's happening at important technical levels, that's where trading channels becomes very effective using candlesticks. But if we can see there's a channel setting up, that this is the top of the channel, extrapolating it out here, notice what happened when we got over here. Lots of sell signals right at the resistance level. That tells us get ready to take some profits. On the other hand, at the bottom of kind of this parallel trend channel, we're starting to see buy signals. That tells us this is a good time to be buying. So this, again, isn't rocket science. It's just being able to see what type of signals are occurring at levels that everybody else is probably watching. We can just do it uh, with much more clarity. Do you consider the wicks? No, the harami is, remember, the important factor. See if I can find it. The important factor for candlesticks is the open and the close. That's why it's different than, okay, good, Harry. That's why it is the difference between candlesticks and a bar chart is the Japanese race traders and close the open and the close. Jim, can you help Carol enlarge her screen? Let's see. The coffee chart has a strong bullish stochastic divergence too. Yes, it's usually where, again, where you're starting to see sell signals at a resistance level, stochastics rolling over. Same scenario. Use binoculars. Okay. Yeah, if there's a, Jim is showing you where the up in the right hand button at the top, or the top left. Yeah, there's buttons up there that will expand your screen for you. Fred, the stock picks that gap up. That's part of our education process. Is we're looking for the reversals, and we're looking for the confirmation of those reversals. So the whole point of educating people on what to do once the reversal occurs, just like your implied skepticism of buying something that's up 10%, if it's coming off a signal, you still might want to be a buyer because that was the signal to tell you there's been a dramatic change of investor sentiment, that stock could be up another 30% because of that gap up. The display, okay. I'll let you all figure out how to help Carol. So if we can see something head up, anytime I see where there's 2 points, I know now that I can draw a parallel line with the prospect that this is going to pull back to my target area, which is this parallel line to this line. Once I see buying in here, I know that if I was short, I'd start covering my shorts. I can go long. Where are my next targets? See what it does at the 50. It goes through the 50. I'm looking for it to come up and test the next channel again. Now, how many pieces of evidence do I have up here that this might be the time to start taking profits or looking for a sell signal? Well, because we're heading for that resistance level, number one, of a trend channel. Number two, again, our simple rule of the T-line, which I probably should have clarified. The caveat of a T-line is you can buy when you see a candlestick buy signal and stay long until you see a candlestick sell signal and a close back below the T-line, with the caveat that the further away you move from the T-line, the higher the probability it's going to come back and test it. So if you're up here and near this resistance level and you've moved that far away from the T-line in the overbought condition, you see a bearish signal setting up the next day, yeah, close out your position. Where is it likely ready to move back to? Back to the T line. Now we can see if it bounces up off the T line, we know what that pattern is. That's going to be a J-hook pattern. Or if it goes through, where's our next target? Back down to the bottom of the trend channel. And so how many pieces of evidence can we put in here that there was a reversal? Well, we had a doji in the oversold area. It bounced right smack dab off the 200. It opened positive the next day right here at this trend channel area and had a big morning star signal that closed above the T line. Where do you think our next target's going to be? Right back up toward the top of the trend channel. Yep, I guess that was the same one. So anytime I see something where I can now analyze that there's a trend channel potential, draw a parallel line, not that it's going to move to this level, but that's a good target. That's the trend channel setup. If you get a buy signal, but a major moving average is near, do you buy on the signal? Or do you wait to see if it goes through the moving average? If I'm fairly close to the moving average, let's see if I can figure out one. If I'm thinking that the buying has started right here, stochastic still not anywhere near the overbought area, I'll be buying. But obviously when it gets to the 50, I'll watch to see whether they get it through or if they fail. If they fail, I know to come back out of the trade. But the number one criteria for candlestick signals is the signal. Everything else is confirmation or a projected target. Morningstar signal is a big down day. It's a 3-day pattern. Big down day, a day of indecision, a doji, an inverted hammer, spinning top, something that shows you there's indecision between the bulls and the bears. And the third day closes more than halfway up this candle. And I thought the pattern is before the signal. But it well, the pattern, yeah, the signal, if you see a pattern set up, the pattern becomes the top criteria. The signal now tells you something might be changing, but you still use the pattern as your main criteria. If you don't have a pattern, then the signal is your number one criteria. And I'll get to some patterns here, I think, as we go into the live charts. Is there a candlestick on a 1 hour setting? Candlesticks scale work on any time frame. The candlestick signals are the accumulative knowledge of everybody buying and selling during a specific time frame. So I used to trade the E-minis off the 1 minute, 3 minute, 10-minute combination. I do my swing trading usually off the daily chart. If you're a long-term investor, you use a combination of the daily, weekly, monthly charts. If you like to day trade futures like I do, I'll use the 10-minute chart as my bellwether and then flip to the 5-minute and 1 minute to see where my entry is. These are all daily charts. But these could just as well be a 10-minute chart or a 5-minute chart or even a 1-minute chart. They will all look exactly the same. Okay, what else we got here? So if I see that right here at this level, I'm seeing buy signals. Again, a candlestick buy signal, gap up through the T line. I assume my next target, first I'll see what it does here, and then assume my next target is up to that level. So anytime I see things that are support and resistance, like you draw a pennant, I'm watching to see what happens. Notice when it failed up here, pulled back. It didn't pull back all the way down here because my signal at the 50 told me I had a big bullish engulfing. And what did that tell me about my pattern? It wasn't coming down here. There was a new force that could break it out to the upside. The lower scale, the bottom of the chart, below the stochastics. The stochastics are the same on any time frame, yes. For the scale, the person was yeah, this is the number of days. Okay, let's see. All right, if I'm missing your questions because I'm not reading fast enough. So anyways, I'm looking for things that are changing, and I'm looking for the breakout of any type of pattern. So again, it's easy to find out where the breakouts are occurring. If I can see there's a resistance level, there's my morning star signal breakout to the upside. That means there's a new dynamic. If I can see I'm in a downtrend and it reverses, just observe the obvious. Look at where the bearish engulfing signal occurred, right smack dab on the 50. What did that tell me about my trend, that I was still in a downtrend? Yes, the bigger the body, the more compelling there's been a change of investor sentiment. So analyzing the market trend is not that difficult. There's your evening star signal and a close below the T line. Where's it heading to? Well, we're going to see if it's what it does at the 50. Didn't do anything there. Look where our morning star signal occurred, right smack dab on the 200. What's that tell us? We're in an uptrend until we see a candlestick sell signal and a close below the T line. And this is what happened this past summer. There was absolutely no trend in the markets. I mean, we made good money here, but then all of a sudden, you couldn't make anything. So a lot of people say, well, what happens when it trades up and down above them right near the T line? The answer is it's not going anywhere. So remember, we're analyzing what the market is telling us, not what we want the market to tell us. If the market's telling us it's not going anywhere, then you have to immediately immediately tell yourself, all right, I've got to change my strategy, and or I don't even trade at this time. You hurt your finger with the grinder. Okay. Thanks, Jamie. It's like the lady that backed into the meat grinder. She got a little behind in her work. So we're looking for things that tell us that there's going to be a strong price move, like the scoop pattern. How long do we hold on to it? Until we see it close below the T line. When do we get back in? When we see it close back up above the T line. We saw the Dow on election day do this. What did it tell us? We were in a strong price move. What did it tell us up here? Not going anywhere. So we've been watching the Dow. Went through a couple months of going sideways until it broke out over here. Here we are right now. And we'll get to the analysis of the charts. As you can see, we did a doji today in the overbought condition. Are we in a trend? Yes. Is the trend going to go straight up? That's what we got to watch to see if there's profit taking going on. Here's where the NASDAQ turned around a while back on election day. Inverted hammer, gap up. Remember, our inverted hammer signal has a very simple statistic. But if you see an inverted hammer in the oversold area and they open up positive the next day, there's probably a 95% probability or greater that you're going to be in an uptrend. There was our bullish flutter kicker. J-hook type scoop pattern telling us we're heading back up. There was our doji gap up, our best friend, telling us we're moving back up. And that's right. It is easy to set up the 150 and 200, the 200 moving average. Yeah. On any deal, on any chart service that you use, they'll say, all right, they'll have where you can customize and put in your whatever moving averages you want to do. All right, so right now in this market condition, there was our big reversal. Notice what the nature of the uptrend has been. About every 4 or 5 weeks, there's profit taking. Take it back up, profit taking. Take it back up, profit taking. Take it back up. This is where we are right now. A left-right combo, which is a doji followed by a bearish engulfing signal. That tell us that the uptrend's over? Might be telling us we're in one of these stages right here. And we've had the confirmation today of, look at the trend channel that has developed in the transportation index. It sold off hard back below the T line. So if the transportation index is selling off, what's that tell us about our overall market trend? It might be getting a little bit sluggish up here. All right. So again, using the charts, especially with the trend analysis, I just kind of make a generalization that you don't have to learn formulas. You don't have to know price percentages. All you have to really have is common sense analysis. And that common sense analysis pretty much comes from the most consistent indicator in the world. The one that's going to work a high probability every time, and that's human emotions. Okay, so if there's some the new folks in here, I think we've got a video that puts this in a lot more detail. And if I'm not mistaken, it's like $147 video. But if you go to this link, I think Pat's got it up for 17 bucks. So it's a good way to get yourself acclimated to how you analyze the price trends. Oh, there it is. Yeah, for 17 buckaroos. There's the link on the. So use that. I mean, I tell people for 3 cups of Starbucks coffee, you're going to get a lot of information that at some point is probably going to produce quite a few hundreds, if not thousands of dollars worth of returns for you. Just knowing what the signals are showing us at different points of a trend. This is being recorded, yes. Okay, now I'm going to shut down the PowerPoint here, and I'm going to bring up the live screens. It's probably they're anywhere from 45 minutes to an hour and 10 minutes. That's kind of the average length of the videos that I do. And the nice thing about the videos is that you can keep going back and forth through it to make sure you get all the information. I've heard it said nothing so bullish as a failed bearish pattern. Jeff, I don't even know. I don't even have to know anything like that because I can pretty much look at a chart pattern. As we can see, oops, we don't want that right now. But we can see that there is this trend channel that has developed here in the transportation index, which is a good indicator that the wave one obviously was fairly substantial, and wave three right now looks like it's about halfway through, that there should be more upside. But that doesn't preclude the fact that we might see a few days of sideways or a pullback to the T line. So now, is that what we can kind of extrapolate? Yes. But if it does pull back, is it going to support at the T line? That's what our anticipation is. But for all we know, it might head on down. So a lot of people say, well, what do you think the market's going to do? And my answer usually is I have no earthly idea. I let the charts tell me what the market is doing. Hold on to your individual stocks. When we go through the ones that we're analyzing, I'll tell Jim to do the double line, and then you can put in a stock request. My stochastic settings is 1233, slow stochastics, and that was nothing sophisticated about that other than one night I sat. It seemed like the standard back then, which was 1455, was a little bit too slow. So I just went through, and in about 30, 40 minutes, all I did was kind of correlate which stocks or which, what do I want to say, where did the peaks and the valleys kind of coincide? And because I'm a swing trader, 1233 seemed to work the best. So we're watching something like crude oil. Is crude oil a buy? Well, right now it looks like it's in a fry pan bottom, so we wouldn't be long or short, but we would anticipate this is going to have a very slow curve to the upside, and then we'll see what happens when it gets back up here to that level. We also have gold, which popped up pretty good today. Where's our likely target? Well, notice what they did on gold. And here's another little factor that is kind of common sense built into what would you set it for on a day trader? Same thing, 1233. When I used to day trade or the SOS trade the E-minis, I used a combination of 1233 and 522. The 522 would tell me the little jiggle jaggles, and the 1233 would keep me in the little bit longer trends. But if we analyze where the Japanese rice traders say, where do most people sell? They panic sell at the bottom. So if we see a big sell-off in the oversold area, we start looking for buy signals. And notice the same correlation of how they use the moving averages. Notice when they came up to the 50, they went through. Then what did they do? They came right back smack dab to the 50, did a doji, and popped up from there. So we could see exactly what was happening right here. And if we see it supporting at the 50, where do you think our next target's going to be? Probably up here at the 200. Yeah, that's a technical term, jig-jag. So if very simple, the Japanese rice traders say where do most people sell? They panic sell at the bottom. Where do most people buy? They buy exuberantly at the top. So anytime we see one of our recommendations that's had a nice steady uptrend like KEM, and they start buying exuberantly at the top, we're a little bit more diligent now watching for a sell signal. Let's see, the dollar. Notice where it's failed a couple times. Right here at the 50. We want to get ready to go short because fell through the ice, came up, tried twice finding where they fell through the ice. If they fail, where do you think your next target's going to be? Down here at the 200. Kind of if you drew a line right down through the bottoms, that would correlate with the 200. All right. Trying to think of some of the other little morning star signal right here on live cattle. Broke this downtrending channel, kind of did a doji sandwich up through the 50. We're still going to be a buyer of this one on strength. The light blue line is the 20, yes. Okay, so tonight is going to be kind of an analysis of what to do with stocks that are in uptrends but showing a little bit of sogginess. Click, we recommend it, but it's trading right here at the T line. So in your experience, dollar, oh yes, the dollar probably is heading lower at this point. So click is in an uptrend, hasn't closed below the T line, but it makes it very simple. If they open this lower tomorrow, we want to close out the position. The market, we don't know. The market was telling us it's still heading in an uptrend, but it's done a doji, and as we saw, the transportation index is off, so we might see some profit taking where they bring it back to the T line. Things like INFN needed to stay up above the T line, so that should have been closed out today. What's the worst case scenario? You see a buy signal, and they do a J-hook pattern, bringing it back up. How did it pop out of here? Popped out on this fry pan bottom. Oh, let me go down to this column. So there's our little scoop pattern. That's why we're coming back into UCTT, and then it opened positive today off of earnings. So is this a time to be buying? And that somebody earlier said, well, shoot, the stocks that I look at are up 10%. What do? You look at the pattern. Now, today this one opened up big and did a doji. And what do we know about the doji? The price is going to move in the direction of how they open it after a doji. What do we know about a scoop pattern? Usually there's a strong slingshot effect to the upside. So if this opens positive tomorrow, even though it's up, whatever that was, 15, 20% today, you can still be buying. That tells us there's a new dynamic in this trend. It's going much higher. So those are the type of things that you want to know about human nature to get you into strong positions, even though they're up. So what I try to tell people, a lot of people say, well, I don't want to buy a stock that's up 3, 5, 10, 15, 20, 40, 80%. You do if it's coming out of a pattern and a signal that you can recognize. So on something like this, Carol, let me wait till I'll get to all the individual ones when we get done with we got a bunch to go through. More than likely, though, I've got a lot of them in here. So ESPR needed to open positive and trade positive. Notice what signal we had here. This really wasn't a signal. So when they were selling it off, what did we expect? They were probably coming back to the first support level, which is the T line. If we were long, what did we need to see today? We need to see it open positive and trade positive, telling us the T line was acting as support. SV, I usually buy, I don't use Bollinger Bands. I usually buy based upon what the signal and pattern is telling me. And a lot of times if they break out above the Bollinger Band, coming out of a pattern, I'm pretty sure when this little fry pan bottom broke out, I bet you dime to donuts this was up above the Bollinger Bands for quite a while. So I'm buying the patterns, and notice how the pattern got started with a bullish engulfing signal, and notice what it did right here at the breakout level. Did a trend kicker signal. Notice how it opened here and closed here. The next day they gapped it up above the previous day's open and went the opposite direction. That tells you there's going to be a lot more upside. Upper shadows equals scouting parties. Notice stock was turned back. Those parts. You could call it a bullish engulfing signal, but remember, a bullish engulfing signal is more effective when you see a bullish signal in an oversold condition. A bullish signal in an overbought condition doesn't mean very much. So the analysis at this point is the trend is in progress. We just don't want to see it close below the T line. And the fact that they kept it up above the T line told us the uptrend was still in progress. Gold, as in Rand Gold, you can see how it broke out today. So there's still more upside. Even though Nugget was trading off, Rand Gold was still acting strong. Gold itself has still been moving up in an slow uptrend, probably heading for the 200. say that. Okay, a few others. These are all, as long, you stay long as it stays above the T line. That's AAOI, Xerox. Stay long as it stays above the T line. We did Nugget. NVIDIA. All right, so NVIDIA didn't do well today. If you happen to have bought it up here, remember, candlestick signals are the graphic analysis of what's going on in human nature. The probabilities say it's moving in this direction. So not only do the candlestick signals and patterns tell you what's happening in human nature, it also tells you when it's not confirming with what the pattern is telling you. So when they gapped it down today, even though it was based upon a downgrade, it was still coming back down, gapping down from an indecisive day through the T line and the 50. You close it out. That's telling you that they haven't reversed it, and no matter what the reason was for it today, you close it out. Now, it's not as crucial that they did a downgrade, because that's not affecting the overall sentiment. It's usually just a short-term supply and demand. All right, so it's still trading down. I don't know whether I'd go short. You can go short, but again, because it's a downgrade, it looks like it. You could go short on this. I'd just be a little bit more, what do I want to say, diligent as far as watching to see what it was actually, or what the trend was actually doing. Now, we also put a recommendation on FTK today that opened positive. So a lot of people say, well, it opened positive and then backed off. We're still in the pattern. Notice what the pattern was. A bobble breakout. Came up, failed at the 200, pulled back, couldn't get through the T line, came back up again. What's that tell us? That this is wave one, J hook wave three. So even though you have a down day and an uptrend, you still go with what the pattern is telling you. Is the T line the dark black line, thin line, or the light blue? The T line is this black line. So you've got the 50, the 200, the 20, and the T line. And then you've got a little line up here. This is the 3T line, which becomes much more effective the further away you start moving from the T line. No, NVIDIA is not a belt hold. Remember, a belt hold looks more like, I think this is it, more like this, where they gap it down well below the trading range and bring it back up. So it's a green candle, whereas the candle today on the video was just hard selling. AMD, you stay long on this one. And the reason I'm pointing these out is that some of these might not have definitive moves, but as long as you stay above the T line, AKAO, it's pretty much telling you your probabilities of staying in an uptrend are extremely high. SBLK, for some reason, does not come up over here. I just don't understand that. This, and then AMN. AMN we were buying because look at the fry pan bottom, and look where they kind of broke out. They gapped up. Now it's doing what we call a double doji. So if this opens positive tomorrow, our double doji tells us there was consolidation. The consolidation is indecisive. If it opens positive, the consolidation's over. And then what do you expect coming out of a fry pan bottom? A very strong price move. Stephanie, yes. But remember, when prices on, she's saying that NVIDIA was a buy and hold all through 2016. But this is one of the things that I had hard time convincing people. A lot of people years back, I don't know how, bought Walmart. because Walmart went from a little baby stock and just made lots of people rich. But then it got to this stage where it was now a mature big company and it didn't have the upside potential that it used to. But you couldn't tell people to sell their Walmart because it had made them so much money they didn't ever uh, they'd never want to sell it. And that's not the point of investing. Investing is saying, where's my money going to make my best return? Not I want to own something that I've fallen in love with. So things like PA has had a nice steady uptrend. And then we had a big day. And remember what happens? Where do most people buy? They buy exuberantly at the top. And when we see that type of day, what do we start watching for? We start watching for selling. Now it closed today right smack dab on the T line. So if you held on to it, what's the analysis? It has to open positive and trade positive to stay in it. If it opens lower, you're back below the T line, you close it out. Look what your stochastics are doing. I'm telling you, it's probably pulling back. Where is it pulling back to? We don't know. It could be here. And this is a case where you can put anything on your chart that everybody else is watching. Let's say, for example, a Fibonacci retracement level. So it could come back here, here, or here. Is it going to come back to one of those levels? Have no idea. But if we have those on our chart, and we see a reversal levels, then we know that was the level that everybody was watching to see if they were pulling it back to. Did NVIDIA close at support? Let's see, pretty close to it. So you have to see what it does tomorrow. Now remember, this was just a downgrade, which doesn't change the effective investor sentiment. It's usually just a short-term what do I want to say, short-term imbalance between the buyers and the sellers. So if you have something like this is why when we do our stop loss, and this is part of the things that help keep your emotions out of your trading. We're still in the process of, well, I guess we've got our final session on the emotional trading session, keeping the emotions out of your trading this Saturday. But if you're in the overbought condition, very simply, just put a safety stop at the previous day's open, because if it comes back down through there, there's trouble. That saved me a ton of times keeping me or getting me out of positions immediately that have had a dramatic change of investor sentiment. We've held this one for a while, but it closed below the T-line today. It needed open positive and trade positive. Remember, anytime we see it close below the T-line, you now have a much greater probability that things are going to be moving in a downward direction. Okay, some of the biggies, like Amazon. Remember, we were buying this one on the breakout. We use this as part of our day trading setup. But if this opened positive, breaking out through this level, it was usually going to have a good move, which it did on that day. Now we have kind of an evening star signal, but notice where it closed, right smack dab on the 3T line. So we're still in an uptrend. We're getting a little bit soggy. So you might get ready to take profits on weakness tomorrow. And that'll be a function of when you wake up in the morning, if the pre-market futures are showing us that they're going to open up the market down 70 points and Amazon's opening lower, close out the position. Apple, same thing. Have a dark cloud today in the overbought condition. If they open it lower, doesn't mean there'll be a full-scale reversal, but probably a good probability they're going to bring it back and test the T-line. And Tesla, notice how you had a shooting star, doji, bearish confirmation. They popped it back up and then did a left-right combo, gap down. So that told you there was selling going on here, and a left-right combo is a very strong sell signal. The fact that they gapped it down tells me my next likely target could be at least back down to the 50-day moving average. And Netflix, this one we haven't been trading just because there's been no direction to it. Let's see. All right, let's go through a few of. We're still ready to short this one because also had kind of a gap down through the support level. So what do we have? We've got a bearish J-hook pattern. So we didn't execute this one today, but if this opens lower tomorrow, what do we have setting up? A bearish doji sandwich, which means our next wave is probably confirming that it's heading down. Yeah, Tesla was earnings, and let me see if there's a couple more. Oh, CTRL. It's probably going to be on the recommended list tomorrow. Because notice when it popped up big, broke out, what happened here? Look at the consolidation. Not very convincing. Then you had a left-right combo, right smack dab off the T line. Buying this one, got the same potential of another magnitude move of this. UPS, probably be looking at buying some puts on this one. Again, that bearish J-hook pattern. There's your bearish left-right combo with stochastic still heading down. If this opens lower, got the potential of another move to the downside like this. So again, this is just knowing what type of patterns human nature usually creates. We're just taking advantage of being able to identify what those patterns are telling us. Here's a big move to the upside. Now, there's our left-right combo, cradle type pattern. They gap it up through here. You could be buying in here. How far is it going to go? Well, it had a big move. The next day, they gapped it up. So if you held on to it and they continued higher, there's two things you can do. One, as a safety, you put your stop right here at the previous day's open. I don't know whether the next thing you do is you flip to your 10-minute chart because you've just moved from 4 to 18. Go to your 10-minute chart. As soon as your 10-minute chart starts coming back down through the 10-minute T line, take profits. What's the worst case scenario? It comes down and heads back up. You can always buy it back, telling you they're still taking it higher. So again, these are just some simple techniques that the visuals of candlesticks allow you to do. Just some very simple spots where you put your stop losses. Here's a situation where we got a doji. It had to open positive and trade positive. When it opened positive, very simple. You put your stop just below the low of the previous day. Because if it came back down through there, what was it telling us? The sellers are still in control, and they're going to close back below the T line. Okay. I guess that's about all I got for tonight. Let's see if some of the... This is what we call kind of a belt hold signal, big hammer signal. This is on TK. If this opens positive, what did this tell you? Tell you they took out a lot of sellers, and there aren't that many sellers in the way. You can buy in the overbought, especially if you're buying a pattern, like a breakout, which is usually going to be in the overbought condition. Okay. Is there any general questions on candlesticks? If at T-line and you are waiting to see how it opens, are you talking about the first minute, 5 minutes, what? Yeah, usually within the first minute. And that's also going to be a function of if you see what the pre-market futures are doing to the markets, and looks like the markets are opening substantially lower, and the stock opens lower, it may only be 30 seconds that I close it out. If the market is trading slightly positive and the stock is opening a little bit lower, it might be a minute, 3 minutes, 5 minutes. seeing if they're going to move it around quite a bit. Sue, that's part of how to keep your emotions out of your trading is if I've bought a position of this, it's a dollar amount position. If I've got a $100,000 portfolio and I decide I'm going to put on 10 positions, each position is $10,000. So if I bought the position, that now I don't have to make any more decisions. All I'm doing is analyzing what's happening in that trend versus whether I want to buy more or not. And I keep it an equal dollar amount because now that becomes just one unit of my portfolio, not any favorite stock or any position. No, now the wicks will show you the obvious up here. If you have a shooting star, more than likely you're heading down. If you have a hammer type signal at the bottom, probably heading up. When you say buy, are you referring to stock or options? Carol, that's up to whatever you want to do. If you're buying a position, like if we were buying Amazon, you might not, more than likely at this price, we're buying the options. But that's up to each individual if you want to be buying the stocks or the options. Remember, the options are merely the a method for buying the stock. I've heard you say sell when you see a sell signal and close below the T line. What if you don't see a sell signal, but it closes below the T line and the next candle goes lower? That's usually my criteria. But if I see something that just closed below the T line and it wasn't a sell signal, I put the same criteria. It has to open positive and trade positive the next day. To stay in it. If it opens lower, I'll close it out. But since I know it's not a reversal signal, I'm a little bit more ready to buy it back if it comes back up through the T line. Jose, there is no symbol. If you turn on your TV stations, or a lot of times your stock trading program will have symbols you can put in. YM is the futures for the Dow. The QQQ is the futures for the NASDAQ. But I usually have CNBC on in the morning without the sound. But they've got a little box that shows you what the pre-market futures are showing. And it will show you whether the market looks like it's going to be opening up or down. Yes. So, but that also, if it closes below the T line without a symbol or a signal, and you can obviously see the next day the market's opening lower, and the stock that you have is opening lower, close it out. You can always turn around and buy it back if it doesn't confirm and heads back up again. Okay. All right. I guess, Jim, go ahead and do the double line. And in 4.1 seconds, do the next double line. Yep. Got to stop the. Okay. The S&P did a hanging man today, so if it opens lower tomorrow, that means there's going to be some profit taking. JNUG, not anything yet, and Nugget, not anything yet. However, things like Gold Rand was up positive today, and not that one, AG was up, not back up above the T line yet. AU might have started supporting here at the T line or of the 50. PTX, this is one of those where you've got the message because even though it gapped up, it sold off. but the message was that it gapped up. So now you watch to see when the profit taking is over. Uri wouldn't be long or short right now. No direction to it. And AK Steel, this one you can get ready to go short if it opens weaker tomorrow. U.S. Steel, same scenario. I wouldn't short U.S. Steel. I'd probably be more apt to short AK Steel. U.S. Steel's got too much support going on in this area. And ETRM, nothing here. If you're short, you stay short. There just hasn't been anything yet to tell you the buying has come back into this one. I would be out of this one. And Grub, another one that you can pretty much get ready to go short on weakness. You can see the bearish J hook. So if it opened lower tomorrow, telling you that the 200 wasn't acting as support, you can now anticipate wave 1, wave 2, wave 3. VVC had a scoop type pattern. If you're long, you stay long. I would use today's low as my stop. If it came back down through there, they're going in the wrong direction. They're back in the sideways channel. If they open up positive, back up into the profit taking of today, you can start buying. A breakout on SQ, anticipate a 45 degree, which would kind of continue the existing trend prior to the consolidation. And CETX, ooh, that's the bullish Harami. Tells you the selling should have stopped. You can buy this on positive trading tomorrow, but then watch to see what happens once they get up to the T-line area. ARNC, there's that bearish engulfing. That's that place where you should have had your stop right here just to be safe. This one, if to stay in it, has to open positive. If it opens lower, it's confirming your bearish engulfing and confirming that the T-line's not acting as support. And FAS, stay long. Just be careful of the little doji hanging man. Weibo. This is a perfect example that if you see a doji in the overbought condition, have your stop right here. The fact that they gapped it down told you should have been out immediately. Anytime you see a gap down of a doji in the overbought condition, they've changed their mind. Oh boy, shouldn't be in it. If you are, it better open positive, but I would probably be out of this one. It's going to take a while for that chart to heal back up. Another one where you didn't really have a sell signal, but once you started trading below the T line, I would have closed out that position. An NVTA, nothing to get real excited about here. If you're long, you stay long, but then I'd still definitely use the T line as a stop. Rick, one that if you had been short, you should have covered your short today with it gapping up, and because it was probably going to come up and test the T line, which it did. I wouldn't go short again on this one though. MBT, that's a nice fry pan bottom with a doji. Makes it very simple. If it opens positive tomorrow, your doji sandwich breakout is in progress. Pfizer, just stay long. Notice how it used the 200 as support after a doji or a kind of a bobble pattern broke out. You stay long on this one. Post properties. Or is that post serial? Nothing here. If you're short, you stay short, but I'd use today's high as my stop. I wouldn't be wouldn't be a buyer until it closes up above the T line. Corning, Just stay long. Don't let it close below the T-line. Dust, yeah, still kind of a sideways mover, but it's in a slow uptrend. April live cattle. You can be buying this one on positive trading. You can see the Morningstar signal, and they broke this downtrending channel. They gapped up through the 50. So you buy this on strength. Just don't let it close back below the 50/T line area. ACAD needs to open positive and trade positive. Have a stop just below the T line. It shouldn't move in that direction. Let's see, PLCE. Children's Palace, you can see the downtrending channel. You can go short on this one with the expectation they could bring it down to the 200, which would be the bottom of this trend channel. B Cove, stay long. Use the T-line as your stop. DRYS, ever since they went from 4 to 104, it's just been dead meat. See if I can see anything here. Shouldn't be in it. Unless you were short, you stay short. But, yeah, I don't know if they're heading for bankruptcy or what. ATW, nice Morningstar signal. You can buy this one with the anticipation. First target is the 50-day moving average. Steel Dynamics, you can short this one on weakness. Probably coming back down into the trend channel. Schnitzler Steel, same scenario. Wouldn't be surprised if they could now bring it down to the 200. Again, notice where they took it up. They gapped it up in the overbought condition. Shooting star, if this opens lower tomorrow, you close it out. That's when they gap it up in the overbought condition, that's telling you to start looking for a sell signal. NAC should be out of this one. Ever since your bearish Harami gap down, you should not be in this one. CF, stay short. Ever since your hanging man closed below the T-line. They couldn't get it back up above the T-line after that. And GDX, trying to come back up, but still not up above the T-line. Wouldn't be in it. U.S. Steel, we did. PA, we did. PA needs to open positive tomorrow. Is this one moving after hours? Let me see. Yeah, I won't be able to tell. We did Amazon. Amazon needs to open positive. Notice it closed right on the 3T line. ENB, all you can do right now is stay short. You can see the big dumpling top. Tells you there's nothing there. So now you watch for that breakdown. Oh, nothing real exciting here. And your volume should be pretty hefty, like well over close to 1 million to stay in it. Tesla, we did. Tesla, you won't get ready to short on weakness. Oh, what is the email? Let's see. That should be, it should be the link is way down at the bottom right now, apparently. Facebook, stay long as you stay above the T-line. ExxonMobil, still in a downtrend. You stay short until you see a buy signal and a close above the T-line. Labu was weak today. Still more downside, which means Lab D is still in an uptrend. You can be buying this one on positive trading. Usually on a doji, if it's a bullish candle, I use the open of the previous day. Let me see which ones, KMTs. If it's the doji, I use the just below the low of the doji. What were the other ones? Wasn't it? TGH should have been closed out today with it closing below the T9. I'm trying to think of which ones that was. But if you've got bullish candles heading up, what ones were they? Was it Nucor? Now that one yesterday with the doji gap down told you there could be trouble. For example, if I'm in an uptrend, I'm in the overbought area, I've got my stop right there. It shouldn't come back down through that level. Let's see, XLU. Nice fry pan bottom breakout. You just stay long on this one. That's utilities sector. MXL. This one you probably should have closed out today with it closing below the T line. You can always buy it back on the next positive trading. Baker Hughes stays short. Nothing here yet. Guild has never done anything for me. I wouldn't be long or short this one because you can see what type of trend it's in. Slow downward trend, and there's just nothing to get your teeth into on this one. Left-right combo is a doji followed by a bearish engulfing signal. That's usually a good indication that bears are not only in control but in strong control. So that's a good strong sell signal. The fact that they gapped it down and now doing another sell signal tells me there's probably more downside to this one. Oh yeah, DRYS, I forget whether one share was now equivalent to 5,000 shares not too long ago. QCOM, you can stay long. Use the T-line as your stop. XLP, consumer staples. Stay long, but you can see you have a little shooting star in the overbought area. Pick a spot that would tell you the sellers are in control, like the low of this day. If it came down through there, they're probably coming back to test the T-line for some profit taking. And Nike was a case where being in the overbought condition, you should have had your stop right here just as a safety factor. Because if there's enough selling to bring it down through there, more than likely they're coming back to the T-line. Okay, our AAOI is up 4 right now. Yahoo. All right. So that's why you stay in some of these as long as they stay above the T-line. They might not be very exciting for a while, but as long as they're a nice steady eddy, hoping that the exuberance will eventually come in. CTSH, we did. Just stay long. Okay, up after from earnings. All right. OWCP. I don't know what that was. Yeah, it could be 12,000. Okay. Yeah, so anytime we're trading something, it's because we know we're in the right direction. There's a wave 1, wave 2, wave 3. And all we have to do is use the T-line once we're above that level to stay long. Home Depot, you're not going to make a whole heck of a lot of money with this one percentage-wise. Now you have a hanging man, a doji, left, bearish left, right. I'd be careful of it opening lower. Again, it's not a very big mover, so it's the type of thing where I wouldn't be trading it. It'd be more of a long-term hold situation. And PULM has done the Morningstar signal. Now you can start buying this one back. Notice what happened when it came out of this fry pan bottom. Big, strong price move. Now it looks like they could be setting up for a J-hook pattern. So I'd keep an eye on this one tomorrow to see if they're if you can start buying this one. Okay. All right. Let's call it a night. Try that trend channel link. Again, you'll get a lot more information than you would if you bought 3 cups of Starbucks coffee. So with that, everybody have a good evening. We'll see you in the chat rooms.